Stock Play of the Day Overtime is an educational program. Any statements made by Ally Invest employees are not intended to be or should be considered investment advice, a recommendation to buy, sell, or hold a security, or a recommendation to adopt an investment strategy.
Welcome to the Stock Play of the Day Overtime Edition. On Monday's Stock Play of the Day, we talked about McKesson. Today we'll discuss, did we score or did we fumble? Hello, everyone. My name is Brian Overby. I'm the Senior Options Analyst with Ally Invest. On Monday's Stock Play of the Day, we talked about MCK. That is the symbol for that underlying stock. We looked at a long call spread, and we're looking at the long call spread inside the Ally Invest Options playbook right now. What we were looking at doing with MCK is we're more of a momentum play. Lindsay talked a little bit about that company and how they are a distributor of a lot of the vaccines that have been produced recently. No matter which underlying company comes up with the magic formula, they would be involved in the distribution, and the warp speed that was mentioned by the administration. They've already talked about McKesson as being a key cog in that wheel. So overall, when we're doing the trade, we were buying strike A, and that was a little bit in the money. And we're selling strike B, that's a little bit out of the money. So this would be the graph at the expiration date of a long call spread. So let's see what's happened with that underlying stock. Since Monday, what I'm showing you here is a chart, a 15-minute chart starting at noon on Monday. And I've drawn a line all the way across basically where that underlying stock was at. It was at 180.50 approximately when we were talking about this trade. And so this would be the rest of the day. Monday, it spiked open on Tuesday, got all the way up to about 183, came all the way back down though, traded pretty much flat on Wednesday, then Thursday, and here we are Friday. And all of a sudden, in the last few minutes, we actually got a big green candle here on our chart. So the stock has kind of rallied. And bottom line is it's gotten back right to where we started. So it's like nothing happened overall. So let's look at the trade inside the Ally Invest option chains. Okay. So we see it's at 180.54, which is exactly where we're at, but it is up $1.38 today, or almost 1%. Inside the chains here, we see on the left-hand side, we have the calls. On the right-hand side are the puts. So we're putting a checkbox on the trade that we looked at. Now, as always on the Stock Play of the Day, nothing's meant to be a recommendation. We're just trying to learn. We look at specific situations and just kind of think about, if you had a similar situation, what you might want to do. So if we're doing this trade, what we're doing, we're going to be buying the 177.50 call, and we're going to be selling the 185 call. That's what we looked at on Monday. Specifically, we targeted 185 because that was the most recent high in MCK overall. So when we looked at doing this trade, it was trading for $3.80. Now the stock has gone down and came back. Now that was the midpoint. We got a little bit of a wide spread, but there's obviously some activity going on right now in MCK because it just made a big move up to the upside. So if we wanted to close the trade, we actually got a small profit, but we got plenty of time. We still have 14 days remaining to the expiration date. I think we would still want to kind of ride this and kind of look at our goal of it getting up to 185. Now it got up to 183, but that happened so quickly. I highly doubt that you would get out of that trade because ideally our target was closer to that 185 range. So you probably would have let the trade ride, and you'd be sitting here right now with the stock right where it was when we talked about it on Monday. Here is the actual trade that we looked at on Monday. It's trading for a midpoint price of $3.86, basically right where we were at. We were long or bought on paper the December 18th 177.50 call, and sold the December 18th 185 call. Now, if you did this trade, and we kind of mentioned choosing expirations is very big on long call spreads. So let's look at the profit and loss graph real quickly for this trade. And if we graph this, we see that as expiration approaches, we're going to eventually morph into this dotted line on this underlying trade. So if we look at this overall, this is our profit and loss graph right now, but as expiration approaches, eventually we're going to get towards that dotted line. Now, what could we do if we wanted to hedge this trade? Well, at this point in time, there's really not a need, but I'd just like to mention this because this is what the overtime is all about. When I'm looking at a long call spread, and it's not really working out. It's not moving fast enough for me. Let's say another few days go by and it's still at 180. Well, one thing that you can look to do is actually convert your long call spread into a long call butterfly spread. In other words, we're going to sell this call spread. We're going to sell strike B and buy strike C and basically make this profit and loss graph at expiration look like this profit and loss graph. And by doing that, we actually bring in a net credit to the account. And when you do that, you're actually reducing your risk. You're lowering your net debit overall. So how would that work? Well, at this point in time, we're long the 177.50, sold the 185 strike call. We'd sell another one of those. And then we'd go out 7.5 points, the exact width of the spread, and buy the 192.50. All right, so in this situation, we would remove this, right? And this would be our trade. It looks like a 155 net credit to the account. So if that's kind of happening right now, we're seeing this stock being very active as we speak. It's all real-time quotes that we're looking at here on the stock play of the day. So overall, we're at a 150 net credit to the account. So if we can bring in 150 to the account, we paid 380 for it. That's bringing in a good chunk of change to help cover that debt. Now, what happens to the profit and loss graph? Well, if we scroll down now and we zoom in here. Oh, I got to add that other leg. Let's go back and add that leg. And here is now the butterfly. This would be the resulting position. And if we graph this. All right, so now what you have is this underlying stock is still at 180 here. It's fairly close to 180. The gray line represents that. But at expiration, you still want it to get to 185, but you really want it to stop. So if it gets to that level, you're probably going to close the trade if you actually put this on. But the good news is you have a lower net debit to the trade overall because we brought in that net credit to the account. So this is a possible alternative that you could do if that underlying stock just stays where it's at or drifts a little bit lower over the next coming week. So that's it for this edition of the Stock Play of the Day Overtime. Please click subscribe and ring the bell, and we'll see you this Monday at noon Eastern time for the next Stock Play of the Day.